Bismillahirrahmanirrahim. Assalamu alaikum. Viewers, you are welcome to my YouTube channel, Finance Specialist. Viewers, in this video, I will talk about taxation in general. What is taxation? What are two broad categories of taxes and their advantages as well as disadvantages? So let's start with our video. Viewers, when we talk about taxation, so a tax is a fee charged by a government on a product, income, or activity. If tax is levied directly on personal or corporate income, then it is a direct tax. If it is charged on a product, then it is indirect tax. So if it is charged on a product or a service, it is indirect, and when it is charged on an income, it is called as direct tax. So direct tax is really paid by a person on whom it is legally imposed. A direct tax cannot be shifted to others. When it comes to indirect taxes, indirect tax is imposed on one person but is paid either partly or wholly by another person. Thus, an indirect tax is conceived as one which can be shifted or passed on. In the case of indirect taxes, the impact and the incidence of tax are on different persons. A sales tax, a customs duty, or an excise duty would be an indirect tax because its burden is shifted forward by the trader or manufacturer on the consumers or buyers. When we talk about the advantages of direct taxes, so we have different advantages. For example, the first one is equitable. The responsibility of paying tax cannot be transferred. Therefore, equality can be achieved through the progression. Very low income groups will be exempted from tax, but when tax rises, the price of the commodity will rise, and it is the same for every person, whether rich or poor. The second advantage of a direct tax is it is economical in terms of implementation. So tax administration and collection cost will be low. Tax will be imposed on the source of income. For example, income tax will be deducted from an employee's salary. This will enable to save expense, like the employee's salary will be deducted, the tax on employee salary will be deducted at source, and then it will be deposited in government's treasury. So the organization will do this job. So this will save lot of expense for the government or the tax authorities. The next advantage of a direct tax is certain. In this type, the taxpayers know how much is the tax due and when should be paid. The tax authorities are also able to estimate the tax revenue because they have the list of all the taxpayers in their record. The next advantage is it is elastic, meaning in times of emergency for funds for the state, this method will serve the purpose, and these are productive as well. As community expands in numbers and financial prosperity, the returns from direct taxes will expand by default. Like more people, when they join workforce, when they start their jobs, they will be working in different organizations. So since they are working in the organization, so they will come automatically in the tax network, and their organizations will deduct tax from their salaries and will deposit in the government's treasury. So with all these advantages, we have some disadvantages of direct taxes. The first one is inconvenient. When it comes to payment of tax, the taxpayers may feel that reasonable portion of their earnings are being paid to state. Let's say in different countries there is an income tax rate, like in UK, in USA, in other European countries. So the tax rate is from 40% to 45% or 50%. So if somebody's salary has already been slashed due to the tax, so a person would feel it very inconvenient. So when it comes to payment of tax, the taxpayer may feel that reasonable portion of their earnings are being paid to state. The second disadvantage is these types of taxes are evadable. The taxpayers may indulge in manipulating their return, thus evade the tax. Direct taxes are often said as a tax on honesty. If somebody is not disclosing the income, whether somebody is doing a business, for salaried class people it is difficult to hide their income, but for businesses they use some sort of gimmicks. They try to show their actual income as very low, so they use certain types of expenses, and they use some loopholes in the accounting rules. I would say they twist accounting rules in their favor in a way that will give them or help them to show their income very less. So it is up to the honesty of a person. If somebody who discloses the income honestly, so the person will have to pay more tax, and the people normally, especially the businesses, they try, if they want to show their income is less, so in this case they will be involved in evading tax. The third disadvantage is arbitrary. If taxes are progressive in nature, the rate should be fixed arbitrarily, but if it is proportional, then the burden on poor will increase. For example, in the society, we have low income group, middle income group, and higher income group. So for different types of income groups, there should be a different tax rate slabs. But if the tax is applied on proportional basis, so then in this case, the lower income group, they will suffer the most, and the higher income group will not feel the pinch of this tax percentage. The next disadvantage is that if the taxes are too heavy, they discourage saving and investment. In that case, the country will suffer economically. Now let's have a look at the other type of tax, which is called as indirect tax. As I said at the start of this lecture or presentation, that indirect taxes are those taxes which are applied on a product or services. So the advantage of indirect taxes, the first advantage is about contribution from the poor. The only means of reaching the poor is through indirect taxes. The poor will be exempted from paying a direct tax, but through indirect taxes, the contribution can be achieved. For example, indirect taxes can be imposed on any product such as a petroleum, such as buying any consumer goods like soap or toothbrush or toothpaste and any other consumer items. So the government can impose tax on those items. So in case if a poor is exempted from the poor person is exempted from paying income tax, so at the other end, when government will impose tax on the product, so when they'll go and buy, so it means that they are also paying taxes to the government indirectly. It is convenient also. All indirect taxes are being paid to the state. uh, they have this advantage of convenience, means the tax will be wrapped in the price of the commodity, and it is paid in small amounts and in part when making a purchase. So the tax is inbuilt in the price of the product. If you want to buy a television, there will be a tax included on it. You want to buy a mobile phone, cell phone, there will be a tax included in it. You want to buy any electronic product, so the tax will be included in the price. So that's why it is convenient for the government to collect revenue through indirect taxes. The third one is about broad-based. Indirect taxes can be spread over a wide range of goods and services. Very heavy direct taxation at just one point may produce harmful effects on social and economic life. As indirect taxes can be spread widely, they are more beneficial and suitable. But while discussing or talking about the advantages of indirect taxes, one point should be kept in the mind, that the percentage of indirect taxes in comparison of direct taxes should be less. There should be more direct taxes as compared to indirect taxes, because if there are more indirect taxes, so it means that the poor portion of the society or the middle income group, they are contributing more as compared to those who are in the upper economic class, or those who are high salaried people or high income group people. So their contribution uh, from that tax in terms of indirect tax will be less, because they will not feel the pinch, while the lower income group, they will feel lot of burden. The next point is about collection. So collection can take place automatically whenever the dealer will sell, the shop will sell any product. So the tax will be charged, it will be collected, and it will be deposited with the government. Non-evadable, nobody can evade it, as they are a part of the price. And the next advantage is about harmful consumption. By being imposed on harmful products such as tobacco, sugar drinks, as well as alcohol. So these are the products, when they are under this indirect tax, when a tax is imposed on them, so their consumption can be monitored, and the consumption of these harmful products can be limited, because the price increase will discourage people to go and buy these products. The disadvantages of indirect taxes include: number one, uncertainty or uncertain. Unless indirect taxes are imposed on necessaries, we cannot be sure of the revenue yield. In the case of goods with an elastic demand, the tax might not bring in much revenue. The tax will raise the price and contract the demand. When the thing is not purchased, the question of the tax payment does not arise. The second disadvantage is undue price hike by middlemen. The middlemen cause the price of an article to rise by more than the tax. A fraction of the money unit cannot be calculated, so every middleman tends to charge more than the tax. This process is cumulative. The next disadvantage is uneconomical. The cost of collection is quite heavy. Every source of production must be guarded. Large administrative staff is required to administer such taxes. This turns out to be a costly affair. The next disadvantage is that indirect tax, it is harmful to industries. They discourage industries. If raw materials are taxed, this will raise the cost of production and damage their competitive capacity. So when we talk about all these taxation scenario, we have covered the discussion on direct taxes and indirect taxes, and we have already discussed that a tax is a levy imposed by the government on a person's income, or it is imposed on a product or a service. If any tax which is imposed on income, it is called as a direct tax, and a tax which is imposed on a product or a service, it is called as indirect tax. Now let's have a look the objectives of taxation. So the main objective of taxation is to raise revenue. The basic and primary objective of taxation is raising revenue, enormous amount needed by modern governments for national defense, creation of infrastructure, and social upliftment schemes make regular and systematic resource mobilization compulsory. So this is one of the objective of taxation. And second objective, it is about regulatory objective. Taxation performs an important regulatory role in different socio-economic aspects, such as regulatory consumption, that state can discourage the consumption of harmful and undesirable goods by levying prohibitive rates of tax, such as very high tax on tobacco or on sugar drinks, cola drinks, and also such as wine or liquor. The second is about regulatory production. Production may be encouraged by exempting new industries from tax, for someone reducing tax on capital goods, increasing tax on imported goods to encourage local production. The next is regulating imports and exports. Imports of undesirable products can be curbed by imposing prohibitively high import duties. Exports can be encouraged by cutting duties and taxes on exports. When we talk about imports, so imports basically requires foreign reserves. Whenever a country imports any item, they will have to pay foreign currency. So if there comes an unnecessary imports in the country, so this will put pressure on the foreign reserves of the country. Similarly, if there are imports of undesirable products and government wants to discourage the import of those products, so government might increase the tax rate by imposing very high import duties, so which will make all imported items very expensive in the local market. And on the other hand, the government will provide facilities to the exporters by exempting or cutting duties and taxes on exports. So for the local exports, it will be very good. They can export their products because locally the production will be cheap. So the people would like to purchase local products, and the local products can be exported to other countries to make more money, to earn more foreign exchange. The next point is about regulating effects of inflation and depression, etc. Raising tax rates can reduce consumption of goods and the demand in general. High levels of taxation can reduce the purchasing power of people, and the funds collected can be used by the state for productive purposes to increase the supply of goods, thus stabilizing the supply and demand equation. The next is about a development objective. So within the development objective, the important points are such as economic development. Economic development is measured in terms of gross national product, that is the output achieved in all the major sections of the economy, that is agriculture, industry and service. Taxation can be used as a stimulant to any one or all the three sectors by judicious changes in the tax rates. Then comes capital formation. Savings can be channeled into investment avenue through appropriate policy measures. Taxation plays a major role in high level of savings by providing different kinds of exemptions from tax on contribution to provident funds, insurance premium, etc. So this allow capital formation. Increasing employment opportunities. Small and medium enterprise usually have maximum potential for employment. Industrial estates, special economic zones, export-oriented parks, etc. have high employment potential. So by giving them relaxation to these segments will lead to increase or will lead to encourage all these small employment opportunity providers. So this will lead to increase the employment opportunities. Objectives of reducing inequalities. This is another objective of taxation. So inequalities in economic disparities. Income levels of individuals vary wildly. It is claimed that rich are becoming richer and the poor are becoming poorer year by year. Taxation can be a powerful weapon in tackling income disparities. The next is about reduction in regional imbalances. Some regions may become well developed compared to others in a country. Tax incentives and exemptions to start industries in the backward regions can be a good method of dealing with the problem. Sometimes industry they want to set up their production uh, setup or facility in a developed area, but the government gives them an option that if you set up your production facility in a remote area, so we will consider your company for a tax holiday. Let's say for first 5 years we will not charge any type of tax. So sometimes reduction in tax or as an incentive to the companies in order that these companies will have to make investment in the remote areas. So this will basically allow the to manage the regional imbalances. So in any country you might have seen that some cities are very developed, some cities are underdeveloped. So by doing these types of or offering these types of relaxation to the industry, so one can shift the concentration of investment from one developed area to another area so that the another undeveloped area will come at par to the development city. So this is another objective which comes under reducing inequalities. So viewers, I hope you would have understood the taxation in general, the types such as direct and indirect, the advantages and disadvantages of both direct taxes and indirect taxes, followed by the main objective of taxation. So thank you for watching this video. Do subscribe to Finance Specialist channel by clicking on subscribe button to get the intimation of upcoming videos. You can share your thoughts in the comment section. Stay blessed. Thank you very much.